Welcome to another week in review. This is for January 20th. We're going to be looking at ES and NQ as we normally do. Just a note about this week, it's going to be an interesting one. So it's a short week. Monday, January 20th is closed. The futures market is open. It's open for the Globex session Sunday night, and then we close I think on at 1 p.m. on Monday. I'm not totally sure. I honestly haven't even looked because I don't generally trade those days. The NYSE is closed on Monday, so volume is going to be very light. Not really a day that I'm going to be super interested in being on the charts. But with that being said, Monday is also Trump's inauguration, as everybody knows, and with that can come some elevated volatility this week. And I guess we're gonna find out pretty quickly what that's gonna look like. So in the first couple of days, first day and first couple of days, we could have a lot of executive orders that start coming out. We could have some tweets that start flying from Trump. Anybody that's traded the prior Trump market knows all too well how a Trump tweet tape bomb hits and can completely change the course of the day, or at least create a lot of intraday volatility. So just kind of gearing up for that this week, and then obviously going forward, it's something to keep in mind as Trump is in office, and we see the full effect of that. So going into last week a little bit, just to give a quick synopsis. So we're looking at the ES futures here. Last week started with a gap down, which was immediately bought back up. So we finally filled the November 6th election gap. We found some buyers down into that low. And then last week actually it was messy, but it actually turned into a trend week, setting the low on Monday, setting the high on Friday. So very indicative of a trend week. We had a lot of data that dropped last week, but we ended up putting in a nice triple distribution on the weekly profile, and actually closed into the upper distribution. We never shifted the weekly POC into the upper distribution, but we did close in the upper distribution. So buyers all week remained in control. For the last couple of weeks, my positioning has been long. I've been looking for us to make a new all-time high on the S&P at least, and I've had some decent rotations from the long trades with the failures to liquidate a few times through those lows. My general view was we'd be looking to fill the election gap from November 6th, and then basically rip from there, put in new highs. And if we do have a larger sell, I'm not really looking for it until later in the quarter, if not later in the year. Obviously that view can be completely wrong, but at least for me, the way I've been looking at this, the way I've been playing this, is primarily on the long side, looking for these lows to hold and eventually get us to clean up the highs. So I'm going to continue looking for that this week, obviously with the possibility of tape bombs starting to hit with Trump. That could be invalidated fairly quickly. But the things I'm looking at primarily here, the daily time frame is one time framing up. The weekly time frame shifted to one time framing down, but we closed back into the prior weekly highs. So this can move back to balance fairly quickly. So I'm not as concerned about that. We had some decent volume come into the lows. We had some aggressive sellers, especially on the NASDAQ, get absorbed very quickly. And no ability to really liquidate, especially on the NASDAQ, which was fairly telling for me last week. And that's the biggest reason why I wanted to stay on the long side was what happened on Monday and Tuesday. So I'll talk about that quickly when we get to the NASDAQ. But just to give a quick rundown of areas I'm watching on the S&P 500 futures. Again, primarily want to stay on the buy side. I think the primary goal of buyers is going to be to stay in the upper distribution that we put in on Friday, as well as hold the RTH gap, or potentially fill this gap down into 6,001s. So basically looking at the range of 6,012 to 6,001s. If we do have any reversion off rip on Globex or on Tuesday, the primary goal they want to have is to stay inside this upper distribution and hold this RTH gap, or at least fill this gap. If we fill this gap, we move very quickly away from it. So from the buy side of the tape, the primary thing I'm interested in, if we can't get immediate acceptance over last week's high, would be looking to see how we react down into this range, down in here into this gap. So in 12s, if there's any aggression, 12s down into 6,000s basically. Failure to hold the gap, I'd be looking for a pretty quick move down into the middle of this distribution, the middle of the weekly distro, down into the weekly POC at 59.80s. Same thing here. I essentially want to look at this as I want to remain on the buy side as long as we're holding this entire range. This is a fairly large range, obviously, but from an intraday basis, I want to see if we have good lows start to form down into here, potentially down into 80s if we snap lower. If we get down into the bottom area of the expected move, so if we get down into 59.60s again, the line in the sand for buyers for me really is holding this gap. So I basically look at this as bullish above the gap is the easiest way I think I can frame this. So ultimately what buyers want to see is continued acceptance in the upper range of last week's distribution as well as the week before. So you can see we have the weekly POC from the prior week down into 59.50s, which is essentially what the gap was, where price stopped. So want to see continued acceptance in this to ultimately clean up the poor structure into 6100s as well as 6118s. So that's how I'm going to look at the S&P. Again, want to remain buy side. I don't really want to flip short on this. I think the only reason I would flip short on this is if we see some really aggressive selling that takes us outside of the expected move. So if we get outside of 59.60s and we start filling this gap and we see, really aggressive selling, I think the likelihood of filling this gap is quite high, which could potentially turn into a decent rotation down for the gap fill and then down into 58.70s back into the 100-day SMA, which is this orange line right here, as well as the bottom distribution of last week's range down into 58.70s. So that's what I'll be watching on the S&P. NASDAQ is similar. So just to go back to what I was talking about before quickly, we saw extremely aggressive selling into this low. It was met. So from an order flow perspective, it was absorbed very, very quickly. Sellers with a lot of size were met very fast on the bid, which continued to restack and reabsorb. So every attempt to sell lower here was basically met. It was absorbed. And then the counter result was the CPI day when, however you want to interpret the data, it doesn't really matter. What matters is what happens. So what happened down here was indicative to me that the likelihood of selling through this, unless we had some sort of really hot print, was fairly limited. We saw a lot of size, we saw a lot of aggression from sellers down into these lows, and they couldn't liquidate this. They couldn't liquidate this below the prior weekly low as hard as they tried. So when that report came in line, essentially, the counter result was, a very fast move away in the opposite direction as all of these sellers into these lows effectively got trapped. And then you had new organic buyers start to take hold and start to take this higher. So that's really quickly, that's how I saw what happened last week. With that being said, I still want to continue to be a buyer of this market as well from an intraday basis. You can take the long-term views and the medium-term views of the market out of the equation. What I'm looking at here is intraday trades and, short-term trading. I'm not going to let my macro views of this market, interfere with short-term trades. You shouldn't either. So that's just how I'm going to play this. Sellers weren't able to liquidate last week. Buyers were effectively in control the entire week. Again, we set the low on Monday, the high on Friday. So again, trend week, multi-distribution up. The first area I'm going to be looking at, if we do see a little bit of mean reversion down, I'm going to be looking at the RTH low. So we did fill the gap that we put in on Friday on the NASDAQ. The first area I'm going to be looking at is this 480 to 430 range. So this prior daily low as well as into the 20-day SMA. There's a possibility in this range too that we could stab down into 400. So it's a little bit fluid of a plan for me to see, can we, if we do get down here, are we going to form some decent lows that get into this range? Can I be a buyer on the right side of the tape as we try and push our way back up if that's what happens? So I'll keep it simple. Again, I think the potential for some more mean reversion down on the NASDAQ is there. So I'll try and see if this makes sense to be a buyer down in here. My positions going into Monday, I have one call left from SPY. Other than that, I'm effectively flat. I didn't swing any futures on this. I primarily played last week only. With everything that's happening this week, I felt it was safer. So Going into it, if it makes sense to be a buyer down into this range, this will be the first range I'm looking at. So 480 to 430. We can see if this holds up. And then ultimately my targets for higher continue to be 21,800s. So I want to see this poor structure get cleaned up into 21,800s. And ultimately what I would like to see is I'd like to see us go back to all-time highs. I don't necessarily know if the Nasdaq's going to have the same level of strength that the S&P has, just with some rotation away from some tech and some high leverage. So we'll see. I think the potential is there. I don't know when this market tops. I'm not looking for this market to top. I don't think it's topped yet. I don't think the S&P at least is topped yet. So, until we see some real conviction and some real exhaustion, potentially into the highs, I'm not really looking for that larger sell. I want to continue to be a buyer, intraday and short term as this market tries to move higher. So the line in the sand for me in the Nasdaq is similar. It's going to be the gap. It's as simple as that. It's going to be the gap down into 190s. So last week I was using this as a primary pivot down into 190s. And the reason for that was the week before, sellers that broke us away from weekly value and closed us into the lows, the daily high was 190. So basically we tried to liquidate lower. We ended up getting a little bit more obviously down in the Globex session. But then once we got back above the breakaway from that weekly value, you can see we came down, stabbed it, and that's what started it. That's what started the move back up to the highs. And then when we retested it again on that close, it was the same thing. We came back up and just basically ripped higher. So line in the sand for me is going to be 21,190s for buyers. If we start getting below this, then the likelihood of moving down into the lower part of last week's range seems quite high to me. I would think at least we get back into last week's value area low, which would be 20,950s. And then we'll see, obviously we'd see if there's buyers down into here. So that's it. Hopefully this helps. If you do find it helps, leave a like, comment, subscribe, do all that shit that people on YouTube say they do. I'm going to continue doing these videos. I'm going to try and keep these, around 10 minutes long because, my attention span isn't much more than that. So hopefully these help. Yeah, let me know in the comments if they do.